Howdy friends, Coulter Brown here from the Northern Ag Network with this month's livestock market report. Gotta be honest, I was hoping to have more bullish news to talk about as we turn the calendar over to May, but things stayed pretty tough in the cattle industry. The futures really underperformed in April and we didn't get the showers that we were hoping for. Of course, the only moisture that showed up came in the form of lots of snow, so that created plenty of challenges, especially right during the middle of calving season. There are still positive things to talk about. Today we're going to talk about the higher cash cattle market. That's a nice thing to have, but futures definitely seeing some pressure. We'll look at the cattle on feed report that did offer some surprises and recap our markets for feeders, cows, bulls, and sheep, and wrap up with some big news talking about the two hearings on Capitol Hill that occurred at the end of the month, dealing specifically with cattle markets. Starting out though, we'll thank the sponsor of our report, AgRisk Advisors. I know AgRisk Advisors really busy right now helping producers with livestock risk protection, offering some peace of mind to ranchers, giving them a chance to protect their downside price risk but leaving the top side open. If you have questions about LRP, contact AgRisk Advisors, get their daily LRP rates and more at lrpadvisors.com. Thank you to Montana Livestock Ag Credit. They continue to support this video, and their experience in ag financing is extremely important right now to help producers work through this high cost environment. And with interest rates expected to rise, now might be a good time to reach out with questions. Learn more at ag-credit.com. And before we get to the markets, want to go to the Wyoming Beef Council for a quick message. Well, trying to find nice things to say about these cattle futures is a bit of a challenge. A month ago, we were talking about the impact of the war in Ukraine, and that continues to affect all markets, particularly the grains, as it's disrupting grain flows across the country and across the world, really. So that's elevated grain prices and weighed heavily on the cattle, particularly the feeders. Now, USDA put out their expectations for crop acreage at the end of March, and they forecast corn acres to fall and soybeans to rise. Now, that could change before the end of planting season, but it does indicate tighter corn production and stocks that will keep those feed costs elevated. So, as we mentioned, through the month of April, feeder cattle fell hard, a lot more than we'd like to see, especially because the spring is typically the high in the feeder market, but the high is well past us now. Those feeders also dragging the live cattle down with them, although the live cattle did see smaller drops. The front month live cattle saw the most pressure, deferreds though holding up pretty well. As you can see, traders believe this market will improve in the second half of the year, driven by ever tightening cattle supplies. The hope is that cattle feeders will be willing to bet on the come through the summer and fall, as there are some factors that indicate they may be willing to do so. They were profitable through the first quarter of the year in the cattle feeding industry. Now, they could see some red ink in the summer, but they expect cattle on feed levels to decline, and that could encourage feeders to have a more aggressive procurement strategy to keep pens full, especially knowing that the underlying calf supply is tightening. Speaking of cattle on feed, I mentioned at the top we were surprised by that report. The expectation was that total inventory numbers would hold steady and placements start coming down, but that's not what happened in the report. Placements staying steady and inventory numbers increasing, the highest number of cattle on feed ever for the month of April. Now, what's driving that? Of course, drought, continuing to pull cattle into feed yards earlier, but we can't do that forever. The fact is there are less cattle outside of feed yards to replace those in feedlots after they're marketed, so we're going to see these cattle supplies decrease in the second half of the year, and hopefully that'll provide more competition for our calves and push prices higher. As we look to some of our local auction markets, we're still seeing demand for grass cattle. There's just not very many of them left right now as they all got marketed early, but a couple of big sales across the region here at Stockman's Livestock Exchange in Dickinson. Some of the heavier 6-weight steers, they sold 170 up to 180, even on the light 7-weights. 750 800-pounders 156 to 162, and 8-weight steers ranging 144 to 154. At the public auction yards in Billings, 5-weight steers sold from $2 to $214. The 6-weights 180 to 195. Lots of heifers in that sale. We saw the 5-weights 178 to 185, 6-weight heifers 163 to 173, topping out at 179 on some fancy replacements. We have pretty well reached the end of the bred cow marketing time frame, just kind of getting those late calvers sold now. Did see some cow-calf pairs recently sell at the public auction yards in Billings. The young pairs ranging $1,900 to $2,210, older pairs $1,350 to $1,750. And at Torrington Livestock, those young bred cows sold 14 and a quarter to 15 and a quarter, 5 to 8 year olds from 13.10 to 14.75. The cow market continues to perform very well. Of course, I'm talking about the slaughter cows in this instance. We've seen elevated levels of slaughter all since the year began and really going back to last year. Of course, a lot of that driven by drought, but there's very strong lean beef demand, and it's supporting these values. CattleFax says in the near term, at least, they expect weigh-up cow prices to stay steady. Most of them right now selling in the mid-70s up into the mid-80s. A few of the top end of those cows, though, still getting over that 90-cent mark. And we have reached the end of the bull sale season, or nearly there. A few left to get through here in the month of May, but by and large, the producers I've talked to have been very surprised with what they saw out of the bull market this year, especially when you consider we've got reduced profitability in the cow-calf sector, and there's just flat out less cows to cover this year. So while the averages may have been down slightly and not every bull sold, by and large, pretty strong prices. At DeBrucker Charolais sale early in April, we saw 677 bulls average 44.45, and 188 yearling bulls at the Arnson Angus sale average 51.81. The sheep market's been pretty quiet here the last 2 months. We've seen some pressure on the lambs. Finished lambs, though, performing relatively well, 225 to 235. Slaughter ewes, lots of pressure in the last 60 days. The majority of them selling from 90 cents up to $1.05. And the month ended with quite a bit of activity happening on Capitol Hill concerning cattle markets. 2 hearings in the same week. The Senate Ag Committee, who we'll talk about first, they discussed 2 bills. The much debated Cattle Price Discovery and Transparency Act that would set regional mandatory minimums for cash-fed cattle trade, and the Special Meat Investigator Act that would create a new office to investigate the packing segment. In that hearing, we heard from USDA officials, several ranchers, and a livestock economist. About the only thing we can say is there is no agreement in the cattle industry on what to do. It's about 50-50 for and against. The ranchers that are supporting it say we need this robust cash trade. We need to know what the price of these cattle is, and that's what the entire fed cattle market trades upon, is the 20% of the negotiated trades. So they're saying we need this market. On the other side, though, producers say if we have a mandate on the way cattle are sold, it's going to decrease our marketing opportunities and abilities and just put more power in the hands of packers. So a difficult situation. Livestock economist Stephen Kuntz from Colorado State says he doesn't see a lack of price discovery and points out that more price transparency does not necessarily equate to higher prices. But senators seem to like those bills, and I think we'll see them move forward, but got to act on them quickly. In the House, that was probably the more hotly anticipated hearing as the CEOs of the Big Four beef packers testified, as well as some ranchers. NCBA President Don Schiefelbein testified. He talked about the areas where the industry agrees. He talked about the need for more hook space, more packing capacity, more oversight of the packers, and he said they do support more transparency. They like that cattle contract library that's being pushed forward, but they are opposed to mandates. Giles Stockton also testified, talking for the Northern Plains Resource Council. He talked about the importance of enforcing the Packers and Stockyards Act, and he wants to see mandatory country of origin labeling reinstated. Now for the Packers, you can probably guess what they talked about. They were point blank asked by House Ag Chairman David Scott if they've colluded to fix the price of fed cattle. Of course, they said no and said the increases we've seen in the price of beef, that's due to inflation, labor shortages that they're dealing with, and strong beef demand. I don't think those answers really satisfied any congressmen. Pretty sure they didn't satisfy any ranchers. House Ag Chairman David Scott said they're going to push for an investigation of the packing segment. He asked for the Packers' participation. And I'll just note here as we wrap up, 2 years ago, President Trump directed the Justice Department to investigate the packing segment, and we haven't seen any results yet. So if you care about these issues, might be a good idea. Contact your congressman, because the real chance to do something with these cattle market reforms, livestock mandatory reporting reauthorization, that happens at the end of September. Well, that's going to do it for this month's report. Thanks so much for joining us, and have a great day.